there, folks, and welcome into today's video. In this video, we're going to get into 3 stocks that are down over 50% in the past year. Some of these are down actually a lot more than 50% in the past year. And we're going to look at these stocks. These aren't 3 stocks I ever talk about on the channel. As a matter of fact, I think probably all 3 of these stocks I've probably never ever talked about on the channels before. And so we're going to get into these 3 stocks. We're going to talk about their business models. We're going to talk about the valuations, and I'm going to tell you if I think these stocks are buys now, if I think there's just stocks to watch, or if I think there's stocks to stay away from nonetheless. So I hope you guys enjoy this video as always, especially getting into 3 different stocks we never talk about and some stocks that have absolutely crashed. And make sure to subscribe to the channel. If you're not subscribed, just click the button. Make sure you subscribe to the channel. Also, so you know, we have a massive deal coming up for the private stock group literally next week, the massive Black Friday sale. So if you want me to notify you as soon as that deal drops for my private stock group, the course curriculums, the private Discord chat, all those sorts of things, go ahead and put in your email. We'll shoot you an email over, or if you want us to send you a text, we'll do that. This is like a massive thing, guys. Like, we haven't done a sale literally since I think last Black Friday for the private stock group, so we maybe do like one a year. Huge deal. I hope you guys enjoy a lot. All right, so let's get into this, guys. Let's get in these 3 stocks up here. All right, so first one is a company named Purple. So if you ever heard about this company, it's Purple Mattress, and they make a lot more than just mattresses. They also make pillows, they make seat cushions, they make blankets, they make sheets. They make a lot more than just mattresses. Like, I looked into this company, here today, and I thought, I assumed they were just pretty much a mattress company, or maybe mattresses and pillows. And yeah, when you go to their website, it's like, holy smokers, they're saying no Jokas. They make a lot of products, and you've probably seen them, their commercials before, either on social media, or you might have seen it on TV or something like that. Especially, it seemed like they were doing some big ad spend a couple years ago, essentially, all right? They have what's called the Purple Gel Flex Grid, which is in their products, and it's supposed to be some cool technology. This is like their big thing. It's supposed to, add cushion and support. It's supposed to keep you at the perfect temperature, those sorts of things. Obviously, I've never tested the product, so I don't have any opinion on that, but that's their big thing, and that's what they push in their marketing. Now, when it comes to stock price of Purple, let's be honest, it has not been a good one. I mean, look at that move down over time, and this stock topped at over $40 a share on a 52-week high, right? And today is trading at 13 and some change, under a $1 billion market cap, around 900 mil or so. And needless to say, it's been tough sledding for Purple Innovation, Purple Mattress, whatever you want to call it. It's been no bueno. Now, if we go ahead and pull up Google Trends, as they say, Google Trends can be your friend or it can be your enemy. And when it comes to Purple Mattress, if we pull up that search term, right, it has been not in a great place recently. If we look to the past, it looks like it peaked out in late 2019 into 2020. And now we're just at a much lower level when it comes to the search term Purple Mattress, whatever you want to call it, okay? Doesn't mean it can't jump back up, but it's just like we're looking at this and we got to look at it from like an honest perspective, right? Now, this company, man, they got caught up into some a bad thing this year, needless to say. A worker, 51-year-old worker, actually died at a Purple Mattress factory, essentially. I guess her arm got caught in a machine, and then I'm assuming she just got crushed, like nasty style, okay? And that's horrible, and obviously that's something that shouldn't really happen at a factory, but it happened. And this is something that caused the company to shut down their operations for an extended period of time. And who knows if they have to deal with lawsuits. I would assume they are going to have to deal with something in relation to that as well, right? And just a no bueno situation for the company overall, and obviously for the woman or the woman's family there. So yeah, that's a whole dramatic situation that this company's had to deal with this year nonetheless, okay? Now, if we look at current year numbers and next year numbers, expected to do 13.8% growth this year. Now, they've blamed some of that on basically their factory had to be closed for a certain amount of time, supply chain disruptions, things like that, right? So 13% growth, that's okay. Nothing too crazy, but that's okay. Next year, they're expected to have accelerating growth, which is exciting. Definitely, if you can have accelerating growth for stock, that's a huge deal, okay? So expected to do, 19% plus revenue growth. That would be a really good sign. That would be very bullish for this company. Also expected to have EPS go up at a massive rate, right? From 9 cents to 46 cents. That would be a huge deal as well. So if this is accurate, right? And this is analyst estimates, 8 analysts covering from the EPS side, 10 from the revenue side. If that's accurate, That is great news for Purple, all right? The key word is if that is accurate, right? If they're supposed to have an acceleration of growth and a massive uptick in EPS profitability, that would be great news for Purple. Now, the question is, can they do that essentially, right? So what I want to pull up now, I want to look at a little, let's call it balance sheet related things and a few other things. Okay, so we're going to go on my favorite app, the Hungry Bowl. If you haven't downloaded the Hungry Bowl, do it right now. You can do it while you're watching this video. Use the Hungry Bowl day in and day out. You can listen to earnings calls right inside of the app, read SEC reports, and we got this View All Financials tab in there, okay? And you can search stuff. So I just want to search cash and kind of look at where cash has been trending. Cash has been trending anywhere from 80 mil to a little over 100 mil recently for the company. So for a company that's market cap is, you know, $800, $900 million or so, to have roughly $100 million of cash is a pretty good financial position, right? So the company definitely has money around to invest in the business and get through tough times if they need to get through tough times, which, you know, let's be honest, next year they're expected to be very profitable. So I wouldn't say that's necessarily tough times, right? Now, we got to be honest. This company has benefited from three things, probably in a pretty good way, right? Rona. Basically, every single company, retailer, anything that sells home-related products, right? Things that are in your home have pretty much benefited pretty well over the, you know, let's call it from about May of 2020 through about May of this year, right? They went through this year where everybody was forced to be home, right? And everybody's looking at their home and like ordering new home products. Paint companies have been doing good. Flooring companies, like a lot of companies have seen big benefits because everybody being at home, including mattresses. And it's like, oh man, I've had this dirty mattress for 10 years now. Let me get a new mattress, okay? And so that has benefited anybody that sells furniture, anything like that. Now there have been supply chain disruptions, so that's been kind of something that's hurt some companies. But overall, was Rona a benefit to companies that sell into your home? Absolutely, it was, okay? Also, you got a real estate boom going on. I mean, 2021 should be the strongest year for existing home sales since 2006, all right? So you got a real estate boom, which, keep in mind, whenever people move, they buy a new house, right? They buy new furniture. This is something that's very common. You get a new couch, you get a new mattress, you get a new bed, you get a new this, you get a new that, right? It's extremely common. And so for furniture companies or mattress companies, the best thing you could really have going for you is people moving. Getting a new house, moving, because that's when a lot of people make that decision like, I don't know if I really want to keep that mattress we've had for 100 years now. Do I really want to keep that couch over there? Things like that, right? And so the real estate boom it should definitely have benefited this company. And then stimulus money, right? Some people needed their stimulus money that came out last year. Some people honestly really didn't, and some of those people used that stimulus money to invest, or they went out and spent it. And so I would bet a company like Purple got some of that stimulus money, okay? So those are three, let's be honest, really big benefits. They have the one big negative, which was the employee, dying at the facility, that they had to shut down production. But outside of that, it's hard to see anything that really, hurt this business model. There's just a lot of benefits for this business model, and it's not like they've put up crazy growth numbers. Now, do keep in mind, this space is highly competitive, okay? The mattress category, insanely competitive. You ever been to a store that sells mattresses before? It's ridiculously competitive. Go on Amazon, look up a queen mattress, a king mattress, and you're going to find there's a million different companies at a million different price points competing in this, right? And so this is a highly crowded space. If you're going to sell pillows, guess what? That's even more crowded. If you're going to sell bed sheets, that's even more crowded. If you're going to sell a comforter, that's even more crowded. So when it comes to Purple, they got a cool brand that they built out here that's around innovation, okay? And that's impressive. And I just think their overall, angle is innovative, and I wouldn't put them quite as commoditized as a lot of companies that compete in this space. But at the end of the day, the mattress category, the pillow category, the sheet category, the comforter category, it is seen as a commoditized industry, okay? And so that makes it tough for a company like Purple to really stand out. They've done a pretty dang good job of it, but we got to be honest, it's some of the most competitive markets you'll ever get into, possibly, right? So the way I look at Purple, I look at the stock, and I think $10 to $15 is a buy for the stock for a long-term investor, somebody that's got multi-years out and wants to be part of this company for years and years out, okay? Under $10, I think where things get really, really interesting. If the stock goes under $10 a share, then that's even a level that I would personally likely be getting in for this company. I think although they compete in a super highly competitive market, and I think they probably have seen their business benefit, at least to a small degree, from everything that's been going on, I still look at this company and I say under $10, I would be intrigued enough to actually personally buy this stock. Maybe if it even fell to 10 to 11, I might still open up a position. But yeah, that's my opinion on this one. As a long-term investor, 10 to 15 is a buy. Under 10, that's like, you know, such a low number that even myself, I would likely get involved with the stock and start buying the stock personally, okay? So yeah, that's my opinion on Purple. Interesting company. The stock's been devastated. Just rough. And we're not talking about rough rescue, no Paw Patrol stuff, okay? Alrighty guys, let's get in the second stock up here of this bunch. It's a company named Lumber Liquidators, all right? This picture, I believe, is from a Las Vegas store. Why it looks so like 1990s is beyond me. I mean, look at this store. I mean, it looks like a dang Blockbuster. I mean, my gosh, look at this. I mean, that's just disappointing. I thought this company made a lot of money over time. Like, man, they should have put some more money into their stores. Like, I look at what RH has done over time with their, you know, palaces of stores, let's call it that. And Lumber Liquidators, that's just disappointing, all right? Lumber Liquidators, around a $500 million market cap for this company. I want to take you guys back in a history lesson. Lumber Liquidators became one of the most exciting stocks in the stock market for a very short amount of time. We're going back to like 2012, 2013, right? This stock went to $100 plus a share. I mean, it was skyrocketing. The numbers they were reporting were great. People were excited about this company. They were in a strong position. And basically, starting in about 2014, it got bad. It got really bad. In this stock, from what I remember, they had a very, very bad legal situation involving some chemicals that they were using in some of their products, specifically in the state of California, if I recall, and they ended up in some big lawsuits and some bad legal situations around Lumber Liquidators, okay? And so, if I recall, that damaged their brand heavily. That also created a massive distraction for this company. And that's why this stock went from like $100 plus a share to like, literally, I think it fell to like $10 a share. It was one of the steepest drops I've ever seen in a stock in a matter of about a year. I mean, it was like a 90% fall just off a cliff in a matter of about a year. And it went from one of the most exciting, one of the most hyped stocks in the stock market to being just awful, right? And, you know, there were some people that blamed it on short sellers being part of that. You know, I don't want to get into all that, but needless to say, the history lesson is quite clear with Lumber Liquidators. Wow. I mean, that's one of those stocks that, man, you know, even if you got into this at 50, 60, 70, I mean, you just got damaged so heavily. I mean, that's what happens sometimes in the stock market. You're going to get some bad luck, and with Lumber Liquidators, that was a bad luck situation, I would call it, at that particular time as an investor. How do you know that they were using some chemical that they weren't supposed to be using? Like, it was impossible to know that, right? But since then, it's had some peaks and troughs and peaks and troughs, and it's really done nothing. And here today, it's $17 a share. It's down over 50% from its 52-week high, which was $35.10. So, you know, this is one of those stocks you would think, Lumber Liquidators, being a flooring company, you would think this stock would be around a 52-week high, right? We've talked about real estate being as great as possible. We're talking about people putting money into their homes. Their homes are worth more than ever. And so you would think all those things would benefit a company like Lumber Liquidators, and it's just not that case, to be quite honest. So look at this. This year, they're supposed to have done about 6% growth. You know, 6% growth in an environment that real estate's booming. Existing home sales are going to be the highest since, 2006? And you have people have all this equity in their homes, and you have cheap credit. I mean, that's just disappointing. 6% growth in this sort of environment is that's not exciting. Anything under 10 is just almost unacceptable for a company like this. EPS obviously expected massively down there. And then next year, EPS is expected to go down again. I mean, these numbers are just like, what? What is going on here? Next year, the company's only expected to grow 3%. I mean, guys, I don't know what to say about this one, but like, those just aren't acceptable numbers for this sort of environment where real estate's booming. Because think about it. If everybody was at their homes, right? And everybody, spent so much time at home, and people have thought about, I'm going to redo this, I'm going to do this, right? Stimulus money, Real estate's booming. Oh, we got more equity in our house than ever before. Why not, put in some new floors, do this. And Lumber Liquidators comes through with less than 10% growth this year expected and 3% next year. I mean, those numbers are this is unacceptable in this sort of market, and it's just extremely disappointing. And I know you could say, well, what about supply chains, things like that? I don't care. Like, the numbers just aren't good enough flat out. Flat out. That almost looks like management's just not doing a good enough job with this company, okay? So extremely, extremely disappointing. Now, also, if we look 2017, 2018, 2019, 2010, and we look at the revenue growth, or excuse me, 2020, I don't know why I said 2010, 2020, we look at that revenue growth, guys, on the income statement over the past few years, this is disappointing. You know what I mean? Like, that's just not great. You look at, gross profit over time, like, yeah, sure, growth, but a very, very minuscule amount of growth. Like, these numbers just aren't dang impressive at all, to be quite honest. On the revenue side or anything, it makes you say this stock is a blah stock. This almost feels like the type of stock that should be acquired by somebody. It really does. It feels like it should be acquired by another company that's maybe looking for another profitable business, to add as like an additional business over here. Maybe somebody like a Home Depot or a Lowe's or something like that gets cost synergies maybe, right? Takes some cost out of the business, makes it more profitable than ever before, and helps out their core business even to a greater extent. That's what it kind of feels like, to me, maybe a Floor and Decor. I don't know, like, it just kind of is a little disappointing here from Lumber Liquidators. So when I look at the stock, Lumber Liquidators, it's not a buy to me. It's too meh. That's the best way I describe it. It's just meh. Like I said, 10% revenue growth in this sort of environment is just unacceptable for a company that's selling products that are going into homes in this sort of environment, guys. It's a meh stock. It's not interesting to me. I looked into it and I was just like, I don't see it with this one. The numbers are just too darn disappointing, even though it's down 50% plus, okay? So that's a Lumber Liquidators LL there. Let's get into the next stock up here. So Oatly, wow. So Oatly, this is this oat milk company, but they also sell many other products outside of oat milk. And this is a company in which, I mean, they went IPO somewhat recently, okay? Let's say in the past year. It was extremely hyped IPO. I remember looking at the valuation, they were talking about 10 billion plus, and I was like, this Oatly company, 10 billion plus? The number seems quite amazing. And when I say quite amazing, I mean like quite ridiculous, okay? 10 billion plus for this company that's going IPO, it seemed a little absurd in my personal opinion, okay? Now, I've done some more research into this one today over the last few hours, and I will say I am much more intrigued than when this company went IPO. One thing is the stock's been cut in half or overcut in half. This had a 52-week high of $29. It's $9.36 today, okay? And it hit literally its 52-week low today, $9.05. $5.5 billion company. Now, you guys know this is right up my alley, right? It's a plant-based food company. Guess what? I'm investing heavily into the plant-based food sector. I believe this is a massive boom for, probably decades to go in the future. So this is right up my alley, but it remains to be seen if this is a stock I'm actually interested in buying. Volume on the stock went silly today, right? 29 million plus shares traded hands compared to 2.8 million. So over a 10x increase in volume today. Just this stock went absolutely nuts, and nuts in a very, very bad way, to its 52-week low today. That's rough for Oatly, all right? Now, in terms of why the stock just hit a 52-week low today, if we look at this here, the company basically, they had a revenue warning, and a revenue warning is never good. The plant-based dairy company reported a third quarter revenue miss and issued revenue warning for the year. Net losses totaled 41.2 mil, or 7 cents a share, after a loss of 10.4 million, or 2 cents a share last year. So losses have gotten bigger. Revenue totaled 171 mil, up from 114 mil. That's good news. Revenue up there. The FactSet consensus was a loss of 10 cents per share in revenue of 185 mil. So they missed by almost $14 million. Big miss there. For the year, Oatly is guiding for revenue that's basically going to do somewhere around 635, or maybe a little over 635. But notice we're expecting 694, guys. All right. So at the end of the day, when it comes to these quarterly numbers, extremely disappointing. They missed on their revenue, and they're expected to miss overall what analysts are expecting for the overall year. So this is extremely disappointing. And here's the thing, okay? When you're a new company in the public markets and you're a hyped stock with a big valuation, the worst thing you could ever possibly do is miss analyst expectations and come in with lower numbers and guide lower. that is the demise of your stock. That is like, yeah, now you can see why the stock has fallen well over 50% from its highs, because you don't do that. And when you do that, get ready for your stock to be slashed in half or much more than half, guys. That is the worst case. That's literally the worst case scenario for a company that is highly hyped. Now, I think this is worth mentioning because the chef is reporting numbers tomorrow, literally tomorrow, and everybody's looking at the chef and they're like, okay, a plant-based food company, Beyond Meat got destroyed, Oatly got destroyed, is Tattooed Chef next on the chopping block to get destroyed? I think Tattooed Chef's gonna put up some amazing numbers, but we'll see, okay? I mean, it's kind of an ominous sign when you see every single plant-based company just getting chopped and chopped and chopped out there. It's like, oh, is Tattooed Chef the next? The good news for the chef is it's already been hit, but then again, those other stocks have been hit and they still got hit again. So yeah, we'll see what comes out. Obviously this video is not in regards to the chef, but everybody's paying attention to this because they're looking at that one and they're like, oh boy, could this be down 20% the next day? So we'll see what happens with that. But staying on track here, Oatly, right, expected to do 84% growth in 2022, but we'll see. Here's a problem, okay? They were expected to do 84% growth next year. But now we're in this situation, right, where everybody's going to be looking at this and like, are they really going to do 84%? They just missed this quarter. Now they're talking about missing the entire year. So who's to say they're going to do 84% revenue growth next year? Maybe they do 50% or 60%. And if they come in with those numbers, right, that's substantially below what analysts were expecting. And so all of a sudden you have more analysts jump off, right? 16 analysts cover the stock. And you get into this downgrade cycle and downgrade cycle and downgrade cycle. And all of a sudden your shares are trading at $7 a share. And you're like, holy Smokas. Remember when we were a $29 stock? Now we're $7. This is fun. Okay. So, and then here's the thing, they're expected to lose 24 cents next year. Who's to say they're not going to lose a lot more than that, especially if they come in with revenue estimates much below what analysts are currently expecting, okay? And so that's kind of the issue when it comes to Oatly here. Now, I will say they're building a pretty respectable brand in the space, and they're getting into a lot of product categories outside of just oat milk. They're getting into yogurts and ice creams and all these different products. And you think about the Skew expansion this company can have. I can see a day when Oatly has 15, 20, 25, 30 SKUs in stores. There's no doubt in my mind, right? Now, do I think this category could get commoditized over time in certain places? Yes. But do I think everybody's going to buy the commodity product or the store brand product? No. But you gotta understand that is a possibility, right? Think about if you go to buy milk at a store today, right? The majority of people that go to buy milk at a store, they go to buy the store brand milk because it's the cheapest, right? So this is something to at least consider that could happen in the oat milk category over time. It's not going on right now, but it could happen a little longer term, okay? Now, when it comes to Oatly, I put this one, this is in between Lumber Liquidators and Purple. I would put this in the stocks to watch category. I'm interested in this one. I'm going to keep a close eye on this one. If they do over $1 billion next year, and let's say they get down to a $4 billion valuation, it puts them at a price to sales ratio of 4 or so. It's not crazy for a company like Oatly that could have exponential growth for the next 10 plus years, right? So yeah, I gotta say this one has me intrigued. I am watching it at the moment. I gotta do more in-depth research. I gotta get on the conference call of this company, and I gotta really figure out, if this company can be trusted. Because I think from the analyst community, they don't really trust the stock right now. But it absolutely has me intrigued. I think it's a stock to watch for pretty much everybody that out there that cares anything about plant-based food companies. As we've seen, a lot of these stocks have been devastating. Hope you guys enjoyed this video. As always, this was a beast of video, 20 plus minutes to put this baby together. And a lot more prep time went into a video like this where we're talking about 3 stocks that have crashed and 3 stocks that I don't usually follow. So I hope you guys enjoyed this. As always, don't forget, massive Black Friday sale coming up. If you want me to notify you as soon as that deal drops, check out pinned comment down there. Much love as always, guys, and have a great day. Don't forget to download the Hunger Bell too. And are you subscribed to the channel? Did you smash?